So one of the buzzwords that you see on financial media right now is the idea of, quote, Trump trades, right? These are these trades and investments that are supposed to be so good because, now that we've transitioned from the Biden administration to the new Trump administration, maybe because of some of the regulation or in some cases, some of the deregulation that Trump is going to enact. There's certain trades out there that could be potentially very rewarding for you. So today I wanted to cover some of what I think are some of the Trump trades out there. And I'm going to cover not just the good Trump trades. I'm going to cover some negative Trump trades as well. Some sectors and companies maybe that aren't going to do so well because of the new administration. Now, what are some of the factors that go into some of these Trump trades? Well, I think it's all about potential tax cuts because Trump has said he's going to start cutting, especially corporate taxes. Tariffs are going to play a big part in some of these trades, interest rates, whether we get inflation under control or not. All of that is going to weigh heavily on some sectors, and it might actually boost up other sectors. I think the sector that could potentially do the best under the upcoming Trump administration is the financial sector. So the financials, the big banks, they did really well under the first Trump administration. I think they're going to do well under the second Trump administration. It just makes sense. We've seen it play out before. It'll probably play out that way again. And I think the reason, especially the very large banks like JP Morgan and Goldman Sachs, the big players in the game, the reason they're going to love the new Trump administration is really it's all about less regulation. It's also about increased merger and acquisition activity. We're going to see a lot more of that going forward as well. That should be good for, again, XLF. If you're one of these passive investors that holds long shares of stock, maybe you sometimes rotate in and out of sectors. Maybe it's time to rotate out of some other sectors and into something like the financials. If you want individual companies, JP Morgan's probably your best bet, JPM, or maybe also check out Goldman Sachs. I think those are all smart plays for the next 4 years. One of the other sectors that did really good during the first Trump administration was the industrial sector. So here is XLI. This is the SPDR Industrial Sector ETF. Some of the reasons that you would expect the industrials to do well is, again, deregulation is a big deal. Also, investment in infrastructure is also a very big deal. Tax cuts especially are a big deal. And I also think that Elon Musk's involvement in the new Trump administration is also seen as a positive for some of the companies in this space. Because obviously Elon, although you kind of think of him as a CEO of a lot of tech companies, I mean, he does have some industrial slash defense aerospace kind of activity going on in certain things, for example, in SpaceX. So I think him being a part of the administration, I think will also be potentially a good thing for the industrial sector. Another sector that obviously gets a lot of coverage since Trump has won the presidency is the energy sector. Everybody expects this to be a big deal. Obviously, Trump wants to drill more. In fact, just yesterday, when Trump was inaugurated, one of the first things he did was he wanted to establish a national energy emergency, is what he called it. The U.S. is in an energy emergency, and he's setting in motion some actions that should heavily favor expanding fossil fuel production. So oil and gas, right? So you would expect we're really going to ramp up oil and gas production. That should really be a big boost to, for example, the XLE energy sector ETF here. If you wanted to play some individual oil companies, obviously ExxonMobil is probably the best to play, XOM. One of the things about the Biden administration is they really kind of weighed heavily on fossil fuel production because they really wanted to invest much more into renewable energy. So, now that Trump is in office, he's going to basically do away with a lot of the renewable energy stuff, a lot of the executive orders that Biden had in place, and we're going to focus a lot more, again, especially on oil. Now, some will say, are we really in an energy emergency here in the U.S.? Is Trump, being a little bit over the top with that? And yes, he is, but in some ways, he's not far off. We do have a bit of an energy emergency when it comes to our power needs, especially with the growth of AI-related technologies and data centers. These things are very energy hungry. So us producing more energy will actually help not just in just the industrial sector and the energy sector, but also the tech sector, which we all know the tech sector does lead the market higher. So even though a lot of people will focus on individual sectors like financials, industrials, energy, it really is tech that moves the market higher. XLK is the select sector technology ETF. It's not terribly liquid, but honestly, if you're somebody that already invests in products like SPY, the SPY ETF, or QQQ, the NASDAQ ETF, I mean, those are essentially very tech-heavy index products. And again, they're smart investments. If you're a passive investor, you're probably already holding shares of SPY and or QQQ. And regardless of who the president is, those are always smart investments. And I think they're going to do very well under the next 4 years of Trump, just like they did very well under the previous 4 years with Biden. Now, when it comes to the tech sector, one individual company I do want to warn people to be careful with: Tesla. Now, the reason I'm telling you to be careful with Tesla is just because their CEO, Elon, being part of the administration and even if he wasn't part of the administration, he's a very public guy. He owns Twitter. He talks a lot. So because of that, Tesla is going to be very volatile going forward. So if you play Tesla, just be careful, right? Maybe stay small in this, because I could see this thing really having some very large swings, some real two-sided action. And you don't want to be in a situation where you're in a product that, has tens of thousands or hundreds of thousands of dollars in P&L swings, depending on how big of a position you take in this thing. So just be careful if you're going to trade Tesla over the next 4 years. For me, one of the things that I'm personally most bullish in is the crypto space, because this administration has said that they are going to embrace cryptocurrency, and especially Bitcoin. Trump has already kind of warmed up to the idea of cryptocurrency. He's already started saying that the U.S. is going to be the crypto capital of the world, and there's been talks of potentially establishing a U.S. Bitcoin reserve, kind of like we have a strategic oil reserve. We're going to have a strategic Bitcoin reserve. So I really think it would be a pretty smart investment for you guys that are long-term passive investors. Don't put a ton of money into this, but have a few percentage points of your portfolio in some Bitcoin. Or if you want stock, how about buying shares of a company like Coinbase? Coinbase is a fantastic company. I love Coinbase. I'm very bullish on this company. I trade options on this all the time, and typically I take bullish positions in it, selling short puts or sometimes selling short put spreads. It's been one of the products I trade the most, and has been really for the last 3 or 4 years. So let's talk about some of the sectors that maybe won't do so well under the Trump administration. I would be very careful with anything in the construction sector, home builders sector. If I take a look at XHB here, which is the Spider Home Builders Sector ETF. So obviously we've already had enacted some executive orders for deporting illegal immigrants, and obviously a very large percentage of the folks that work in construction and home building, like 30% of them, are actually undocumented, illegal immigrant workers, unfortunately. So that could weigh on that space. Also, Trump is obviously going to start enacting tariffs, or at least he's talking about it. None of them have gone into effect yet, but tariffs also will inflate material costs. Housing prices are already too high, so we really don't need inflation regarding materials and especially home building. Some other sectors that could be affected by the upcoming Trump administration in a negative way. The auto industry could be affected, especially if we do enact tariffs on Mexico and Canada. That could be a problem. Also, discount retailers, if we enact tariffs, it's probably going to be on China, especially. So many products, especially that the discount retailers import, are from China. So again, those sectors could be negatively impacted by the upcoming Trump administration. But of course, all of this is just guesswork. For one thing, a lot of these policies have not been enacted. We don't know anything yet really about new regulations or potentially deregulation in any of these industries. The man just took the oath of office yesterday. So we're really going to be in a kind of wait and see kind of game, at least for the first few weeks or possibly first few months of his administration. And even when certain policies go into effect, you never know really how the market is going to react to things. The market is very emotional, right? Because it's people, it's human beings trading these products, and you never really know how emotional human beings are going to react to any kind of news. So as always, whatever you decide to trade or invest in, be careful, stay small, trade responsibly. Take care, guys. Peace.